afternoon, depending on where in the world you are. I'm Snorlax. You guys also know me as Tommy. I'm joined by Max Tucker and Jackus. There is no second best daily YouTube stream within the crypto finance sphere. Welcome to Market Check, guys, brought to you by Because Bitcoin. Would love to just go ahead and dive right into it. Happy Tuesday. I hope that everybody had, a great sleep overnight. Having a great morning so far. Ideally, nobody viewing this was impacted by the Unibot hack last night. I still think that's pretty unfortunate for everybody who likes to participate on chain. So ideally, nobody who is viewing was impacted in any way. But yeah, no, like I said, let's get right into it, guys. Just a reminder, if you are here early, we do appreciate a quick like and subscribe. Really helps boost our channel and really helps boost the stream so we can continue to get more of you guys in here and have, just a better viewing experience for everybody. But yeah, no, I mean, let's take a look at the S&P, the NASDAQ. I mean, we're pretty much opening, I would say, flat across the board on a lot of these major stock indexes as well as Bitcoin, right? But the big story has been more about the S&P and the NASDAQ trading into high time frame support. And conveniently right before Powell, right? This is probably going to be a fairly important FOMC if there is ever going to be one. Sorry if you guys hear my cat. but if there is ever going to be an important FOMC, it could be this one. We haven't seen a macro event really impact markets too heavily in, I mean, it feels like probably over a calendar year at this point. But Powell does potentially have, bigger implications for the larger market cycle, as well as the stock market on a more granular and lower time frame basis. And we'll get into that, of course, later on the show as well. I did want to note within the stock market today, we did have a pretty decent drop on NVIDIA as well as Apple. We are seeing a little bit of weakness in big tech here before we we do see Powell tomorrow. I think it's FOMC today and tomorrow, but Powell's speaking tomorrow. So maybe today is just noise and we'll get the real move tomorrow or coming out of tomorrow. But I do think that is somewhat notable here as, we do approach that date. As far as Bitcoin goes, like I said, I mean, we are pretty much just hanging around that 34, 35K level. Will we break out? Will we break down? Will we retest lower before breaking out higher? I think there's still a lot of questions that still need to be answered for Bitcoin after we had that huge move about 1 or 2 weeks ago, driven by the back of the spot ETF hype, right? Is this going to be a sustained rally? We'll see. I will say I'm seeing derivatives get a little bit overheated here on Bitcoin, and I think that might be a bit of a cause for a concern. But if you get a breakout, then I wouldn't say that it's anything out of the ordinary for a trending market, right? But if you continue to go sideways with funding going higher, that wouldn't necessarily be the best sign. For altcoins, if we see any upside in indexes, you have to imagine that altcoins probably, see at least a little bit of a benefit. ETH is a bit of a, what's the word? A bit of a black sheep at the moment in the sense that it really hasn't shown any. I mean, I expected a little bit from ETH. I still think it can trade towards 1950, 2000 here on a leg higher. But yeah, I mean, right now it is trading a bit like the black sheep in the sense that people are either buying more into Bitcoin for the fundamentals, as well as the technical pumps that we've seen, or they're buying a lot more into these altcoins like a Solana that are maybe a bit trendier, provide a bit more beta. But maybe ETH can remind us why we do love trading it, right? Which is that those explosive moves and those explosive rallies that it tends to have. But let's go ahead and get right into it, guys. We do have, like I said, a pretty big meeting tomorrow. We think, we never know. But I do think that markets as a whole are sitting at some pretty critical inflection points that we can work off of as traders. So what are you seeing in the markets, guys?
Yeah, good morning, everybody. It feels like a long time since we've been back here all together. I don't know. The car dealership ruined it for me yesterday. I had to get my oil changed and turned into a whole thing. There was a recall on the software in my dash or whatever, and it took like 4 hours and they didn't tell me about it. And oh man, but I'm happy to be here, man. Happy to see Snorlax here. Mr. Plutonic, man. Look at the beautiful planet, or once was a planet behind him, man. It's so great to be here. I'm excited for today, man. I'm really excited. And I'm excited for the very near future because I think we are going to see some rapid price appreciation across the board. And yeah, I mean, Tommy, you are correct. This is the biggest meeting that we've probably ever had until the next FOMC, man. Then that one's the biggest one. But this is the biggest meeting ever, man. The biggest FOMC until the next one. So look, I have remained consistent with my core beliefs over the past 6 weeks. I think that two Fed interest rate skips in a row equals a Fed pause, an official Fed pause. Okay. So they're not going to come out and say, hey, we are officially pausing. We are done hiking interest rates. All your problems are behind you. You know, everything is all good. However, you have to read between the lines. And I think if you read between the lines and you look at where rates are at right now and you look at what other countries are doing, and I would love Jack to talk about that in a little bit because he actually was the first one to point that out to me a while back. Smaller nations are actually, you know, already done with their hikes, and they're actually, some of them even done with their pauses, and they're into cuts already. Sometimes you can interpret these as sort of a lead and lag to what the U.S. or broader Europe will do. So I think that they're done. They might puff their chest out, but I think that they're done. And we've talked about this before, and I'm not going to do it right now. I'm going to wait until later in the show to do it. Okay. But we went through every single example of a Fed pause. What we've seen in the equity markets is perfectly in line with what we've seen during previous Fed pauses. We see a very aggressive, terrible drop. It's over. It's completely over. The recession is here. The interest rates are finally kicking in. I mean, we're almost 11% off the high. To the low here, we were 12%. And that's actually perfectly in line with previous drops that we've seen leading into an official Fed pause. And then we get the true Goldilocks period. We get the true Goldilocks period coming out of the Fed pause. And we actually see equities and risk rally pretty aggressively. I don't have any equity long exposure. I haven't for, quite some time, but I'm thinking about it here pretty soon. I think we're in discount territory, but I want to wait and see. But yeah, anyways, happy to be here as always, guys. I want to go through those examples later on, but I want to talk with everybody first. What's going on, guys?
Tucker, you're on mute.
Yeah, no, I realized. Have you guys looked at I wanted to just look at ETH real quick. I mean, do you guys want to stay on legacy actually?
No, we can do whatever, man. Let's do some ETH.
Yeah, real quick on
but
ETH.
Only if it's bullish, Tucker. If you're going to be bearish, we can't talk about it. Okay.
It's neutral. It's neutral, man. It's neutral. So your big ETH lines, right? We tapped this bottom. But locally, I've been looking at I'm just gonna I'll leave them. Like this.
No, right? No, that's propaganda.
No propaganda, Tucker. Max. No propaganda.
That's made up. That's a made up line, Tucker.
And then this one, there's a bullish line.
That's a valid line. The top one, I don't know about that.
So we're kind of this is a bullish take. I mean, this looks good. We had the pump and we're kind of bull chopping upwards, and I think it might want to just do something like that, because on the lower time frames, like the hour, even the 4 hour, we're putting in higher low. All these lows.
Let me save you some time, man. It's called vertical accumulation before blast off. All right,
that's
what that pattern's called.
Yeah, it does look like that a little bit, but I don't know. I think ETH might be. I mean, we've all been saying that ETH needs to catch up here. This is kind of your spot, right? Like, if it can't get a move up here, I like green box, but you got to do something here on ETH, man. You have to, because we've seen we've seen Solana running, we've seen other alts running, and this is everything you could ask for with Bitcoin to get alts to run, right? Like, this is everything you could want. You blast off, you go sideways. We've gone sideways for about a week now. We've seen some alts run. Solana's up like 50% in the last week and a half or something, but maybe less than that. But this is exactly what you want. And ETH has still not really been able. It's trying to carve out a bottom here, but we need to see this thing get some moves up, man. We need to see it soon. So, what do you guys think about that?
Jackus Cook, man. Chef Jackus. Oh, inverse Jackus. Oh, no. What happened here? Oh, no.
Inverse Jackus.
Is this Jackus who's bearish on ETH suddenly? Is this inverse?
Okay, let's go, guys. So right now we are heading into a major strong resistance, guys. And the problem is that we have not retested this support, right?
Okay.
So what I'm looking for is a strong dump here. We create a breaker inside of this area. Okay. This is where people get hopeful that this was the shakeout, and then we go boom and finally retest this support. It's clean, it's out there in the charts, and we need to be very careful for this. It's a clean structure. Look at the touch. Look how precise it is. It starts right from here. People are looking for continuation, but look at it, guys. This is it.
Capo will be vindicated.
Capo is wrong, man. Capo is wrong.
Jackus is memeing, but he's making a valid bearish argument.
Yeah. Oh no. Oh no. PO3. Oh no.
Listen, guys. Okay.
Look at you, Jackus. You're scaring the audience, man. Look at this. Look at you're scaring people, man.
This is how it starts, guys. Okay. So right here we had a accumulation. Okay. This is the deviation, and this is the manipulation right into that monthly resistance. Look how clean it is, right? We're gonna add some hammers here because the hammers send the price down.
Bigger.
That's Tucker's favorite emoji.
Bigger hammer.
You're gonna need a magnet on there as well at 12K.
All right.
Yeah.
Okay.
Wow.
Okay. Why are we stopping here, guys? This is an untested support. Okay. So
I have a question. Question for you. Do you think Bitcoin could maybe even go negative?
I mean, we've seen that with oil prices. So the answer is yes. It can go negative. And I mean, at that point, you will be paying to hold BTC.
Evan Case,
I don't know who, but
there is no second best, man.
You'll be paying to some. So this is, guys, this is a clear pattern. This is a manipulation right into resistance. People getting overly bullish here. We reject. This is the distribution. We break the structure, right? Then we can add a little bit of Fibonacci's right here. We retrace to the golden zone, right? It's the range highs, and then boom. There is a gap down here. Is the CME gap. All those getting filled. So give up your hopes, guys.
It's so funny to see Jackus be a doomer, man. It's so funny. Oh.
Right here, your untested resistances, and those are getting hit. Right? Do not get too hopeful though. Ease, and let me hide all of these
folders too. Nice folders. Very nice.
Okay, those are old ones. I need to create new ones right now because this is really bad. This is as bad as it gets, right? So there was, we go logarithmic, right? And then look at it. It's so over, guys. So over. We have broken this.
Retest. Yeah, it's just the retest.
Okay. And then and then we had the range sweep, pretty clean, right? So if we zoom in a little bit, we had this range sweep with range retest. Now we are getting a retest right into resistance, and right here we are sending lower. There is this inefficiency we gotta fill. So
you know that there's somebody out there watching this that's like, yes, he's being serious. We're going to $300. Yes.
I am serious.
Oh yeah.
This is getting filled.
Oh yeah, I'm sure.
Filled, you know. Look at it. One hammer here. One hammer at this resistance. We break the structure here, and it's getting sent down. And I'm being serious.
Evan, who are you? It's just oh, Evan, man, you're hilarious.
Yeah, so be careful, guys, out there, you know, being overall bullish right into resistance. Right there. And if this is not enough, no, if we go
Evan, if I could give you any piece of advice, I wouldn't mention that publicly in the comments, man. If that's really your plan, I would keep the cards close to your chest, you know. Can't endorse that, Evan.
Look at that line, you know, near perfect. Cleaner retest. Okay, let's look at Sol.
Yeah, I mean, Tommy's probably going to win the bet, right?
Forget this.
Imagine if the comeback is real, Max.
Fake.
You said fake.
Tommy, if you came back from this, man, that would be, I mean, that'd be one of the best comebacks, man.
This is just a deviation. This is a stop run on shorts. But right now, right here, this is the overextension of the lower time frame bullish leg higher wave C and bearish OB, manipulation market makers, and then rejection.
I mean, you actually make a good point, man. You know, weekly order block right above equal highs.
It's over.
Yeah, it's over, man. Lower than that, $5 maybe. Yeah.
This is the next stop. This is the next stop, guys.
You're telling me that Sol is not going to flip ETH, Jackus? Like somebody said on Twitter yesterday?
Someone said that?
Yeah, I'm not going to name who, but I think you can probably guess.
That was the top of Sol ETH for sure.
Sol is only flipping $5 to the downside, man.
Tommy's perking up right now.
Well, that means Max is giving me a first-class flight and a steak.
Yeah.
And a steak, I forgot.
Tommy, did we end up officially accepting the triple down or no? I don't remember.
I should have, though.
You should have. Really, it's not too late if you want to do it right now. I mean,
what are you offering?
Well, remember, we were texting about it. It was an additional 50 Sol, but paid out at current prices, I think. And we said it was 29 at the time.
And I mean, SPX, look at it. That's horrible. Look at its sell-off, you know. This is straight new lows. New lows, guys.
Tommy, what do you think about that? Do you agree?
About Sol or S&P?
S&P.
I don't know if we're literally going to go, if we have just like this massive cascade, or if we stop at 36, 35, 37 in that vicinity and then consolidate for maybe a few months before seeing the next leg lower. I'm not sure. I think it really all depends on what sort of get on volatility.
Will said we want Will.
Look at it. Look at that, guys. Equal lows, confluent with 3 months order block, and we have a golden zone right here. It's a
Jackus, I
perfect
actually
level
do think that level
straight to
gets hit
zero.
eventually, though. I think we go to all-time highs first, but I actually do think we go to pre-COVID highs. Like 2 years from now. Wow. And guys, before we continue on with Inverse Jackus today, we have 14 likes on this video. We have 33 people watching. Guys, inexcusable, unacceptable. I know that Will is not here. The comment section is very upset about it. Will is out sick today. But guys, if you want Will to come back tomorrow, we need to run up that like count, man. We're going to permanently kick Will off the show unless we can get these likes up, guys. So please do it for Will. Help Will get better. Help Will return to the show. Please, let's like this video, guys. We're up at 18. Let's see if we can get this above 20 real quick. Please like. And also, if you're new here, please consider subscribing to the channel. I promise things are usually a little bit more optimistic and bullish than is being painted today. But we have Inverse Jackus today. It's Jackus's twin brother. And, it's a real shame. But, we make do with what we've got. We've got Inverse Jackus here today, explaining how it's all going to zero and it's completely ogre. But yeah, guys, please like and subscribe. Thank you guys so much for being here on your Tuesday, and happy Halloween, guys. Happy Halloween. Maybe this is Jackus's costume.
Jackus, people are actively market selling as you're speaking, bro.
Okay, you guys want me to be bullish? I'm gonna be bullish. Okay.
Oh God, bullish the 10-year. Okay, yeah, bullish
Okay.
yields. Yeah.
All these stops exposed. All these stops exposed. Okay.
Jack is just fudding every
all
single bag that I have,
dollars.
man. Every single one of them on this show. Wow.
Okay. This is where the market wants to reach. Right here. Until all these are gone. This was the major sell-off, and then there's the slow bleed. And the market always loves to come back for those stops. So we're going right above here. Okay. These are all the stops that are exposed. Do not think that the US yields cannot go to 10%. They are absolutely going there. Okay. And where does the US government finds the money? It doesn't matter, because they will print them, right? So 10%. Okay. And then small pullback, maybe something like that. Maybe even test new all-time highs later on after destruction, and then maybe we're gonna start going down again. So I wanted to stress this out. By the way, seen a really great guys on CNBC television calling for even 13%. I think that's over exaggerated. I think 10% will do it, but still lots of room to grow. So be careful on that. Be careful expecting low numbers again. Okay.
Jackus, look what you're doing, man. Look at this. Why am I agreeing with Inverse Jackus? Man, look what's happening, man. Price is moving down as you're speaking. We have bear whales in the audience.
They're nuking my DYD rewards before they even make them liquid. I'm sick.
I know, man. When are we getting paid? Where are the stimmies?
Dollar index, clean support retest right here. New highs. You guys wanted me to be bullish. I'm super bullish for new highs. Clean retest. Then 140. The dollar milkshake terror is not over. This was just a this was just a bear trap for the dollar index bears. Clean uptrend, higher highs, higher lows. That's it from me today, guys.
Thank you, Inverse Jackus, for nuking price live on stream, man. Wow.
Summoning the bells.
But Jackus, what do you think about where equities are at going into FOMC, man? Because I think you're in the camp that the Fed is done. They're beyond done hiking interest rates. Its time has come and gone. We are now into the pause. Bullish, right? Bullish equities.
So now that Jackus is back, we can delete all this crap because it makes no sense. And we're gonna start talking some real shit. Yeah, I
I'm
think
gonna put that on Twitter, man. I'm gonna make you answer for that on Twitter, man. We're gonna blow that up. Viral bearish
shit.
Jackus.
Jake is flips. Yeah, I think
See, this is actually a good point, though, man. This is something we got to worry about, man. Do we need to check ourselves a little bit?
Yeah.
Is mocking the bears a top signal? It could be, man. That's actually the best point that I've heard in a long time.
Yeah.
Jackus, was that a fade signal, man? Do we have to fade you now?
definitely, guys. I was just hedging my calls right here. So if it goes down, Jake has told you so. You know how this game is being played, guys. Come on now. Like even all the bears that've been telling us 12K are telling us, I told you so. We are going to 35. So yeah, except maybe couple, of course, but
Yeah.
yeah. Anyways, I think once again that the FOMC rate pause. I've been calling for it for a while, and I think tomorrow is a done deal. We can look at the percentages. Let me quickly find them. Max is already typing that out. Okay, so the percentages slightly changed from yesterday, but we are 99.6% for a rate pause tomorrow as well. And usually when that's the consensus, few days ahead, when it's 1 day ahead, it's the way it is. And I don't think there is going to be future rate hike after this one, because as you said, when you get 3 rate pauses in a row, it's official. They may not say it officially and say that the rate pause is there. As you said, they'll probably act tough and say something like, if there are future rate hikes needed, we will do them. We want to be ready, blah blah
We
blah.
remain data dependent.
Yeah, we remain data dependent.
That's their favorite line. Yeah. We remain
But
data dependent and we will use the tools at our disposal. Okay, guys. Same thing every time.
Same thing, exactly. So they're trying to act tough, and I'm not saying it's a good or bad thing. It's just the way it is. But the reality is that what matters is how we go into these events. And if the price is coming down, usually into these events, then the price tends to revert. And when the price tends to go up into these events, it's sell the news, even if it's positive, right? So as I keep on reminding, the market bottomed. I think this June 2022 print was on the highest CPI in like 20 years or something. And then we had this big rally. Sure, we had another dip, but like overall, it was pretty damn bad situation. We had still rising rates and so on. So I think generally tomorrow is going to be good catalyst for the reversion. Max and others, that I had this one laid out during our calls, that if we reject from here, saying this is probably a good time to sell, and then rebuy here, and if we lose that, we go for these equal lows. And then I still do not see anything to convince me that the market is crashing from here. I think this is a giant shakeout, and I was prepared for it. I cannot say once again how this lag. I basically expected some fuckery around here, right? However long it takes, it can go for a little longer, but I'm not expecting like this from here. That's not what I'm expecting. So area accumulation, and then slow grind up higher, create that narrative. Yeah.
I think that makes perfect sense. I wanted to talk about and just do this example again. You know, we've done it here on this show, and actually just go over some of the previous Fed pauses, and just kind of overlay it with price. I might pull a Tommy and steal the screen from you. There's no laughing matter. That's Tommy's move. That's what he does. He just you're in the middle of showing something and he just steals it. You know, it's just gone.
Wow, man.
Here, FFR, Fed funds. Let's add this on here. Let's make it look a little bit better. Make it purple. It's a good color. Okay,
Max, how dare you?
I didn't steal it. That's fake news. You stole it.
Dare you?
You're a thief.
You're a thief.
You're a dirty thief.
Oh, that was good.
Nope. See, I don't want that chart either. Let's go SPX. Oh, look, I've already got them kind of drawn out here. All right, let's remove this. Let's remove this. Don't know what this is. Okay, I want to just go over this. All right, we're going to mark out official Fed. I actually already have some drawn right here, but we're going to mark this out real quick, and then we're going to go through the examples. I think they're worth going through, guys. I really do. I don't know. I mean, we could consider this to be cuts. I mean, the real cuts happened, you know, during COVID, right? Kind of cherry picking, but let's just go through, man. Let's just look at some. Okay, so the blue line is going to be the pause. You can see that, you know, we didn't nuke initially, right? So like we paused, went up a little bit after the pause, and then of course we went down here. This is a really great example here. Dip into the pause, rally up and out of it. Same thing right here. Aggressive dip, Fed pause, we rally out of it. And I think we could see something very similar to what we saw over here in these past two examples. This one was back in 2008, 2006 to 2008. But I think we could see something very similar over here, you know, and you got to read between the lines a little bit with the Fed pause, right? So let's just say we get the official Fed pause here because they're going to be skipping, and, you know, then maybe we rally for a year. I don't know. Let's just say somewhere around here. I have no idea. We'll see when they start cutting. But, you know, these times, I think, again, you just have to look at what's happened the previous two cuts, or I'm sorry, pauses into cuts. And the real recession doesn't really start happening, you know, until we're really, you know, we're deep into these cuts, guys. You know, it's just, I don't see really why this time would be materially different. You know, look, we're cutting rates there. Right here. I mean, we kind of started cutting here. You know, we were well off the lows, but the real cuts happened later on. It was like a cut and then a little pause, you know. But anyways, I think that this dip is perfectly in line with what we normally see. And I actually think it works a little bit better with the NASDAQ, where some of the dips have been a little bit more pronounced. You know, for example, this one right here. The NASDAQ dipped.
Oh, man. Pause, Max. Look at this comment.
That's a fantastic comment.
Look at that comment, man.
Thank you, Will. Thank you, Will. It's beautifully said. Here's a great example, right? NASDAQ dips 18%, Fed pauses. Look what happens coming out of it, you know, right here now. Let's mark this bad boy out. Pause. I don't know, put it there, whatever. Point being is we dipped aggressively into this pause, and then we rallied out of it, you know. Then we rallied out of it aggressively. So I'm just looking at some of this and I'm going, really, you know, we're kind of coming back into this, you know, these hot areas right here. Fed's about to pause. Look at what's happened during, you know, previous Fed pauses. Why would I get so bearish? You know, this is the first real pullback we've had all year. You know, maybe we just dip right into this and then we can spring right out of it as long as the Fed doesn't, you know, do anything too crazy. And we can rally up like this. You know, why would it be different than the previous couple times? You know, why? Why? I don't know. Anyways.
Okay, Pokey says, Jax, I've been following Will for years, and he used to show us charts that no one agreed with, and he was called Negative Nancy. But after most of those charts were right, like always, then that stopped. You remind me of Will back then, Jackies.
Oh, that's a nice comment.
Thanks, Okie Pokey. I would add to that I've already been calling lots of stuff, and it has played out. And so many bears were calling for zero, and they've been dead wrong. And how many of them came back, apologized, or said anything, right? And here I'm keep getting. I suppose that's maybe due to my rhetoric, but I keep getting questioned a lot. Well, lots of those stuff has already played out.
Yeah. It's a little. I mean, maybe it's set up nicely, but the VIX and the dollar are both pretty high going into this Fed pause, man. Both pretty elevated.
You know what is not elevated though, Tucker?
The like button.
Yeah, the like count is not that elevated, guys. We are at 26 likes on this video. We got 42 people watching. Thank you guys so much for being here. Happy Halloween. Happy October 31st. I don't really celebrate it because I'm an adult, but that's okay. But guys, please consider liking the video. It really helps the channel grow. It's really awesome that you guys are here showing up every single day. We got 44 people watching. You guys truly are the best. Please help us grow by just liking the stream. It does wonders for the robot at YouTube headquarters. And, we got to make that robot take a liking to us. So please, if you have not liked the video yet, please just take one moment, make sure that you're signed into your YouTube account and just hit that like button. Furthermore, if you're new here, this is your first time watching, perhaps, we are Because Bitcoin. We are a financial media company, and this is Market Check. We are live every single day, Monday through Friday, here at 10:50 a.m. Eastern Time. We are here with this normal cast of characters. Plus, we do have one more guy, Will, who is out sick today, but he will be back tomorrow, hopefully. So it's a really great time. Please consider subscribing to the channel as well. One more plug, and then we're going to get back to the channel. Okay, then we're going to get back to the show. Guys, the first link in the description below, www.becausebitcoin.com/premium, will take you to our website. It will allow you to sign up for our premium content. We have a Discord. We do over an hour of live private calls every single day with this group of guys, plus some extras, okay, plus a couple extra BB analysts. We do live private calls, trades, setups, analysis with the Because Bitcoin Discord every single weekday, Monday through Friday, twice a day, over an hour a day of private content, plus means to communicate with us 24/7. You get to see all of our active positions. And if you use the code that I'm about to put across the bottom of the screen, guys, I'm going to put it across right now. You use this code, Twitter BB. I know we're on YouTube. It doesn't make any sense, but I set up the code for Twitter a while ago, and I don't want to make another one. Use the code Twitter BB. You get 30 days for free. It will not charge your credit card. It's a really great experience. I know a lot of you guys tune in every single day. You can support us, and you can also support your trading journey by learning and trading live with the Because Bitcoin team every single day, Monday through Friday. First link in the description below. Use that code at checkout, Twitter BB, for 1 month free. Nobody else is giving out 1 month free, guys. Nobody's giving out 1 month free, man. You got to give that a try. But anyways, Tucker, what are you doing here, man? This is that's a huge green magnet.
Really, just a work of art. I've been working.
But one thing I want to mention too is, I mean, I just saw that Jackus, inverse Jackus, was showing us that Sol is going to flip $5 to the downside. So I don't.
Hang on now.
I don't understand.
We're almost done here. We're almost done.
It's a huge hammer.
This is called.
Biggest hammer I've ever seen, Tucker.
You ain't seen hammers yet, bro. This is called the inverse hammer. Look at that. Boom. It's going to blast it upwards instead of down. This magnet will obviously help attract price, but and obviously this is simple.
Where's the hammer red though?
Yeah, you're right. The hammer probably should be green, man. It probably should be green, but No, just you know, a little PA recognition, man. You know, we got this, and we got a little green, big green, bang. Little green, big green, bang. That's actually bearish because I don't know if you got actually I know you guys didn't know this, but Max and who was it? Who was with us? Wabi? Yeah. No. Who
What are you
was with
talking about?
us
With what?
at when we saw Soul 777?
Oh, that was me and
Ed.
you and Ed, man. I got a
Ed.
picture of that. Yeah, we
We
saw a
saw
license plate.
Yeah.
We saw a license plate that was Soul 777.
It was literally this, guys. It was literally this. So I will be taking profit on my spot Soul at 777. I'll tell you.
I have the picture, man. It's a real picture.
It is a real
It's
picture.
us in front of a license plate and it says Soul 777. That has to be where Soul is going.
Yeah, I'm
Well-
gonna change this to that. Yeah, you ain't seen propaganda yet.
You didn't like my capo picture?
I do. We should have had that on for inverse jackets though.
Yeah, no, we should have.
This one's better.
Is it gonna be Solambo 777?
Yeah.
Man.
Solambo.
There you go. What other YouTube show is gonna give you this kind of detailed analysis? None. I'll tell you right now, none. No, but in all reality, I know we're getting a pause tomorrow, but the monthly chart is kind of bad, man.
No, it doesn't, dude. Look,
Yes,
draw a
it
horizontal
does.
line across all those body
I
candles. The
know.
top.
We're not gonna break it.
No. The
first
ones down a
test.
little more, even down a little bit
What,
to the right.
here?
To the right. Yeah. Those. How does that look? How does that look bad to you?
I mean, you know, I'm
Exactly.
not saying we're gonna break it on the first attempt, but you know, you just
Propaganda, man. Propaganda.
let me turn on my Hikins for increased propaganda.
I just want to quickly jump to the interest rates, as you were saying, Max, earlier with Poland and Czech. So we have a meeting on Thursday in Czech because Poland interest rates already dropped from 6.75% to 5.75%. So 1 basis point already. And in Czech, we had 7% interest rates for about 15 months now in a row. And on Thursday, there's a meeting, and it's highly likely they'll probably drop this Thursday or the months after. But it's getting really bad already in Czech with the economical situation, and they are ready to cut. And I think the same thing will be happening for US, Great Britain, and Europe, and in like a Euro area zone, I mean. But it's time for that once again. I'm giving it year time with the rate pause.
1 year's time.
When do you think we have to cut, Jackus?
We have to look for all aspects, like the non-farm payrolls, which is jobs created. We have to look for initial jobless claims. We have to look how like are there credit defaults and so on and so on. So we have to look at what state the economy is, and then based on that, and there is multiple factors to look for, right? And none of those are currently pointing to recession right here. I think, as I've been saying, it's gonna come, but it needs time, and I think approximately 1 year from here.
A year from now?
Approximately.
Yeah. So why we're paused for a year where we get to go up only?
Not up only, rather like a slow grind up higher, in my opinion.
Yeah. I don't know, man.
What is your take, Tucker, on this situation? Or maybe Tommy even. Haven't heard from him for a while.
Yeah, Tommy, what do you think?
I kind of feel like we've already had the pause rally. I feel like we've been front running it since we bottomed. So I mean, that's just kind of where I'm at. To be bullish on the market structure, I would need to see a shift bullishly. Because like I was saying yesterday, it just feels like we've been perpetually bleeding from the high. But people are perfectly comfy to bid it and sit ultimately underwater, expecting a pause rally to save them. And I don't really know that I think that's super healthy necessarily. But I guess we'll see. Like I said, if we see some structural shifts to the upside, I think you can change things with momentum and short covering fairly quickly.
Yeah.
Tucker, what do you think's gonna happen, man? What do you really think? Draw me the path, brother.
Draw you the path.
Draw me the path, brother.
I mean,
Also one thing. Sorry to bother just quickly. One thing to look at also is the inverse yield curve until that starts to cross the zero, and not just touch it, but really cross it upwards. That's also what you want to look for, and also look for bearish structure on the weekly for equities.
there's the path, man. There's the path. OMG, pause rally. Oh, bid it up. Double top. It's completely over. I mean,
Now
I
I
don't
can
know.
put this on for you. Okay, now I can put this on for you.
Yeah, now you can. I mean, this was the pause rally, man. That was the pause rally. Possibly.
You make a good point. It was a hell of a rally.
It was a hell of a rally.
A hell
It
of a
was
rally, man.
of
We
a
really
rally.
moved up. We moved up hard.
32%.
Yeah.
And in real terms, we made all-time highs. Like you look at structured products that institutions trade, like a levered SPX short, for example. I forgot what the ticker is, but that made or like the SPX short would have technically made a new low. The S&P would have made a new high adjusted for inflation.
Yeah, well, if you look at SPX divided by M2, we basically did go to all-time highs. You are correct there. Like, let me find it. I had it pulled up earlier. It's a good chart, right? Where are you? Where are you, chart? Yes. Okay. Right here. Okay, let's go back to moi. So we technically did. This is SPX divided by M2. M2 money supply. I mean, we basically did, right? I mean, that was more or less an all-time high. That's a pretty nasty little rejection there. There's no denying that's a tricky little spot. That's a stubborn level for SPX divided by M2.
That is.
However,
What does that go back to? Just 2020?
However,
what's that saying about 3 or 4 taps at resistance? I can't remember.
It's completely over. That's what it is.
However, we're coming into a nice spot right here. Real nice spot. This is, we're retesting. This is the first retest of the blast off zone because all of this right here, this square right here, accumulation, expansion. We are technically coming back to retest demand. This is demand. So I just want to say, I know it feels super bearish coming back into this level, but look, like, do you really want to fade the first retest? What if we just do this and at least just come back up again?
We always laugh how people get bearish at support.
They do. And it's hard not to be, right? It looks terrible. Why would you want to be bullish? Something that looks like it's about to die. You have to be. But I mean, this looks awful. What are we really talking about here? This looks terrible. But I think we can still rally out of this. I really do. And I've been arguing, in our Discord for a little bit now that we're somewhere around somewhere around here. Like this is basically where we're at.
Yeah, it's a good point.
And I think we're going to basically see this. And, you could maybe argue it's like this. So even if you're bearish, I think you can get a really crazy rally out of here. I do.
Yeah, especially that FOMC is tomorrow, and we know that price likes to revert its trend on those days.
Yeah, I mean, we're just so distressed right now. Like we're just so completely distressed, and we are starting to see some bull divs across the board here. Like this is the daily time frame. Price down, RSI moving up a little bit, We're starting to see some bull divs forming, under 30 on the RSI.
Which hasn't happened since the bottom.
So I'm just saying, like we're very, very oversold at these levels. We're very, very oversold. And again, charts love symmetry. Let's take a look at the top here, right? RSI down, daily time frame, bear div at the high. So it's like these signals, they do work, right? So you could be super bearish, but I think I mean, would you short down here? Absolutely not. Like we could go down further. I will not rule out. I mean, for one, I think that this is a great level. I don't know if we come down here right now or we come down here later, but these lows are going to get sniped, I think, at some point. And maybe it happens soon, or maybe it happens like a year from now. No one really knows. But I'm just saying, like, you want to short the S&P 500 while it's 10.5% off of its high, as we're going into most likely a Fed pause tomorrow, while we're seeing bull divs forming across the board. I'd be scared too. I wouldn't feel comfortable with it. Certainly not. But that's just me.
I mean,
one more thing too. I was playing around with this earlier. Everybody wants to talk about how yields are going like straight up forever. We're just gonna see a 45% 2-year. I'm embellishing, but you know what I mean. And I'm just saying, like, we're seeing the same thing, the symmetry that we saw at the top for TLT. Now we're seeing at the bottom, right? So price up, TLT, so long duration treasury bonds, higher high, bear div on the RSI. Now look, this is the weekly time frame, by the way. Now we're seeing price lower low, RSI higher high on the weekly time frame. What do you really expect here? What are we really talking about? You think you're going to see TLT go down to $50 and you're going to see the S&P 500 go to 3,000 and they're both going to bleed forever in perpetuity as we're going into a Fed pause tomorrow? It just seems like a point of it seems like we're at a local extreme, in my opinion. And I'm a technical trader, right? There's guys that can explain the fundamentals, perhaps more eloquently than myself, but I'm looking at a lot of these high time frame indicators and they're screaming oversold and potential bounce incoming. I think yields are probably going to drop like a stone at some point soon. Be looking for the 20-year to probably pull back here shortly. I mean, look, let's just do a little bit of this, right? Where are we at? What if the 20-year starts breaking down here, right? Okay, there's, again, I mean, these are inverse, right? We're talking about the same thing, but 20-year, clean TA, right? You can do TA on yields despite what they tell you. And, we're starting to see these high time frame bull divs across the board, so it's just like, do I really want to get bearish 10 or 11% off the highs here as high time frame bull divs are printing and yields are starting to move back down? There's no guarantees. There's no guarantees in anything, right? There's no guarantees, but your job as a trader and an investor are to attach probabilities to an infinite amount of scenarios and place bets. And I just, I'm looking at this and I feel like we're approaching discount territory. That's all.
Yeah, and by the way, I wouldn't say we are like bullish equities. None of us are. Right? I've been bearish equities. I mean, not sort of bearish, but like I'm calling for stagflation for so long for equities. But that means that within that stagflation, you will have periods of ups and you will have periods of downs. So basically, you are ranging. That's what stagflation is. And I'm just saying right here, I think we go a little higher. But then I am in agreement with the bears. I'm just saying like the bears got the timing wrong. That's all I'm saying.
Yeah, for sure. And I want to point out this level on the Nasdaq as well. Oops, don't need this. We'll fill this in with some blue. Nice monthly FEG, hit the midpoint exactly on the
That
dot.
color scheme is very pleasing to the eye, Max, on the monthly.
Hey, thank you, Snorlax. But yeah, I mean, we hit the 50 fib of this monthly FEG. Furthermore, on NASDAQ, I'll maybe go from like these highs right here, like these equal highs that we initially swept. I mean, we're coming back again into even more support, and like I'm kind of counting this as a bit of a deviation. So you could tell me I'm cheating a little bit, but I think this is a valid enough trend line given that we had a solid reclaim right down here.
I'm just confused with which chart to use, Max, because I've seen you that you are using the E-mini chart, and I'm rather using the index chart on all the assets, and I see that the E-mini are different than the spot chart. Yeah. So, for example, on your E-minis, we can already see where it retested this level that you have marked, whereas on the spot chart, it hasn't, or like the index chart.
Yeah. I try to use both because I don't really know either. I think that E-mini, as long as I've been trading, has been I think it trades cleaner. I pay for like the real-time data. So
Yeah.
I feel like it's pretty accurate. At least I like to think so because I'm paying extra for it. And I adjust for the contract changes. So you got to do like the adjust because it's a continuous contract. But I think it's pretty clean. But yeah, I mean, it is, you make a good point. Like it's different, but I look at both, I try to look at both, figure it out.
See that level that on the right we have already retested that I don't know what is it, like August 2022 high, whereas on the left chart we have not yet even come close to it.
Yep, and it's a good point. So here's what I'd say. Let me actually adjust for the contract changes. So if I don't adjust for the contract changes, then it's the same.
Okay.
So, but with the E-mini continuous, when you pay for it, you can do adjust for the contract rollover, and then it paints a different picture.
I see.
So I like to adjust for the contract rollover. I feel like it's cleaner, and I'm like, why would I not adjust for the contract rollover? But yeah, I mean, it's a much different picture. But I would use this one. Yeah, I would use the E-mini. I think it's cleaner. Real-time data. How about this too? 3-day order block right here. Do we like this? No? Yeah. Maybe.
Lower.
I'm done cooking. Someone else cook.
Lower high.
Jackus, what you got? Dollar milkshake?
Dollar milkshake theory. Zodiac is saying to look at the DXY, and as I've been saying, I was saying that we can even see a new high put in, but overall I'm looking for a rotation and lower high compared to this one, right? Once again, you cannot have bullish gold and bullish DXY for a longer period of time. I'll put it over so you guys can see it. And obviously I have to invert those, right? And forget the little periods where, okay, let me maybe put it like, oh shit. Start with gold. IDs.
I actually agree with this. Even as a bear, I don't think that the dollar is going to break the 2021 high, but I think it can push pretty high up there still.
Yeah.
And then I'm ultimately a bear on the dollar for the foreseeable future.
So Tommy, when you say you're a bear on the dollar for the foreseeable future, can you be a little bit more specific on what you mean by that? Like what time frame and where do you see it going potentially?
It's that's kind of a tough question to answer. I would say I think that it on a higher time frame could go all the way back down below. I mean, maybe even below 75. I mean, the 2008 lows. I think we could be in a on a higher time frame. We could just bleed below that level, but that's more on my thesis that we could be on the verge of entering a secular decline period, where you see, the native currency kind of decline in that manner. But we'll see. I mean, right? There are plenty of supports before that, but you look at like weekly market structure. If we're going to continue doing something like we've done since essentially the the mid 80s, where we set a high, we bled all the way down to 70 to 90 within that range. We formed a lower high at about 117, 118 in the early 2000s. We went back down into the 70 to 80 territory. And then I think we could do the same thing again, right? And that's kind of where I'm at.
Okay.
So I am bearish on the dollar probably over the next few decades, but I think it can go higher in the short term.
Yeah, so this is the gold versus inversed DXY, and you can clearly see that all the peaks and bottoms are relatively very same. But as always, when you use these EM correlations, you have to understand that they are on the higher time frames, and they can diverge slightly. So, for example, here on gold, you get basically 3 equal lows, whereas DXY was already dropping because it's inverted. It was already dropping lower ahead, right? It was making higher lows. And then sometimes, for example, here, we still got the move higher and lower on DXY, but DXY went lower, right? If I put it in the normal context, it went below these lows, while the gold hasn't make new all-time highs here, but the lag was still there, right? And overall, they tend to correlate, and it's just I do see, and it's not just that we're gonna have this like in gold, right? It's not gonna be like gold is gonna do this. It's gonna continue break new all-time highs on the fourth touch, and then it's gonna enter its new bull run. I believe this is like done deal basically, and it's I cannot see anyone arguing this much. What they can argue, people, is the timing maybe, but like it's gonna enter higher, and if gold is gonna be running higher, then, and I've been saying this, DXY can make a new low, and maybe it can touch this one here, but then it's gonna rotate. And what I'm saying is that I'm viewing this area as the rotation zone. So I do not know how they're gonna manipulate the world economies around. And if we go straight from here, I think we surely could, but it's gonna play a catch-up game on gold and produce this downside for DXY because it's inverted, right? So in this case, upside. And that's the case why I just cannot be bullish on DXY for any new highs. I do have to agree that DXY, if I just put this one in, it can take this high as well. It's possible, but it doesn't have to, and that's the point. So it can go up there, but it also can just rotate anywhere around here. It's very much possible. Now, I've seen a comment about the world liquidity, and surely if you, for example, gonna use the Fed balance sheet, then surely. But if you're gonna look at the other metrics that are liquidity too, like the RRP, reverse repurchase agreements, then you can see that the liquidity is entering the markets again, because this is basically liquidity stored by the banks within the Fed. So if it's going down, that means the liquidity is going back into the markets. And then we can see that the real, if I add these into the equation, you can see that the liquidity is slowly starting to crawl back into the market. So it's not like the liquidity is drawing down. It's not. It's definitely not spiking. Somehow crazily, but it's there. This is the SPX versus M2 money supply. And I'm just not seeing, as we discussed, I'm even looking at this market structure, I'm not seeing a rejection here to new lows, right? We've already got this rejection, and I do think this level ultimately holds. But I'm also not saying that we do something like this, right? Could see new highs. I don't know.
Jack, is M2 still declining?
I think so. It's stagnant. It's been stagnant since April.
Okay.
Basically since that. I think basically since that bank collapse in the US.
Yeah. Because I was just thinking, how, what would cause SPX divided by M2 to make a new all-time high? And it'd be, potentially if stocks, even just put in a little bounce, maybe they go to all-time highs, maybe they just, put in a big bounce and M2 continues to drop. That could probably send us there. But yeah, it looks like it hasn't really moved too much.
We still have to keep in mind all the other M2s as well, because it's not just US M2 at this point. It's all the economies combined, because all these matter too. Some more, some less, of course. There is the weight. So we can see that the global M2s are slightly different. We can see that, for example, GBP was dropping since September 2022. But look at it since, right? It's growing since July higher. I don't know what's EU M2 doing. See, we can see that there are some decent spikes in the other economies as well. And since the markets are nowadays so connected, this matter a lot. You cannot just look at the US data at this point anymore. We can see that the euro money supply is now at 15T.
What do you think about, I don't want to cut you off here, but what do you think about Ethereum and ETH BTC, Jack? I'd love an update from you.
ETH USD?
Yeah, either. So ETH and then maybe ETH BTC as well.
That's true. No. We never got an update from Jackass, only inverse Jackass.
Yeah.
Okay, let's keep this one in.
Look at that hammer. Oh, no. All caps, inverse Jackus. Oh my.
Yeah, so starting from the monthly, just I'm gonna make a new painting. Starting from the monthly, this holding is super strong. I cannot see how people are bearish down here, but I'm still saying, okay, let's go one by one. So monthly is holding this support very well. It has 3 months. It has held here. Actually, it's been 5 months. It's been in February, March, August, September, and October. All 5 months has held this within the wick. This is all buy. This is all bits. So the monthly here today is gonna most likely close very, very strong. Gonna get out of logarithmic chart. So where's the next monthly level? And I would say, once again, it's this one. This is the next
What
strong
about
monthly.
just to be a little impartial, what do you think about the underside retest of that first big drop that we had in 2021? Yeah, like right there. Yeah. Because that seems like we would probably get, we'd maybe stop there first.
Yeah, definitely. These are good for pauses. So like I could see market coming up here, doing small pullback, but then ultimately I think this is a strong resistance. This is where the big selling started. Right?
Yeah, I mean, it was straight down, There's a lot of inefficiencies on that move. A lot of them.
Yeah. So going from that monthly to weekly, we still have this strong ascending triangle. Very clean, confluent. We discussed this live. We discussed this 3 weeks back live, right when we were trading right here on the Arley on this very stream. Right here, we were discussing this level must hold. That it must be a deviation between these two lows. And since then, it has held it and went higher. So now, being on weekly, we have this ascending triangle, and I love it that it's happening basically right below this below this range that BTC has already reclaimed, and we know that ETH loves to catch up on BTC and vice versa. So I do expect that to happen, but right now this is still a valid bearish argument that we are trading below this weekly strong supply zone. And I've been saying that this is a full confirmation. Once we break it higher, and I multiple times I said this is a valid one, and the price is indeed holding there. I'm just anticipating based on many other factors that we break it higher. And once we do, we have broken the structure here, and then we're gonna go for something like this. Once we break this bigger higher time frame triangle to the upside, then I don't really care what happens in the world. This is gonna be used as the base. Whatever happens here, whenever we come back to it, it's gonna be used as a base. If we do come back to it, we don't have to.
And arguably, that's what's happening with the S&P 500 and the NASDAQ right now, is we had that base last year, and now we're coming back to retest it.
Indeed.
At least that's how I see it. Some people don't agree, but
yeah, I do agree with that. So going back to ETH, we have broken the structure already here above these two highs, and we can see that the price already used it as a support, and now it's ranging right between these two. So once again, valid argument from the bears for Ether, but it's hard for me to see a scenario where Ether doesn't follow BTC here. I'm anticipating it to be lagging, and then it catches up. Now, I'm really liking this scenario on the futures pair, where we have tapped into this weekly demand plus the CME gap, on Ether, and we are in this. You can call it falling wedge, bull flag, whatever you want to call it. I don't really care that much, but it's a clean reaccumulation within this leg. And then I do expect it to break higher and go and fill this gap that's above us, the one that BTC has already filled right here, right? And as I've been saying, the market doesn't always fill all the gaps on the downside. It doesn't take all the equal lows. It doesn't retest all the supports. Sometimes it leaves those open, but on the upside, it does tend to.
Where has it left it to the
this.
downside before?
Ether?
Or Bitcoin, either one.
So BTC currently has the one open at 20K, around 20K.
Yeah.
And it has still this one opened, right? But people only appreciate or confirm the gaps when they are like legit gaps in the market, right? When there is a literal gap. But the gap is also this. It's no different. When you get this is also a gap, basically. There was no trades in between, no retests.
And Bitcoin doesn't have gaps because it trades 24/7, right? It's always on.
Yeah.
But the CME is like fake Bitcoin,
Exactly. It's just futures market. But it does show periods of time when price was quickly repricing and there were not lots of orders. Just like this. This is the same gap. Imagine this was CME. This would be a gap in price. It's not different.
Sorry to interrupt you, Jack. But I did want to say, what do you guys think about the fact that CME pretty much led the rally and is at I'm not sure it's quite at all-time highs, but as far as volume goes, but it definitely has more open interest, I think, at this point than pretty much every exchange not named Binance.
Go on.
So I'm not sure I understand, Todd. You mean like the CME futures led spot pricing?
The CME futures, I can't remember if it did. I mean, I know for a fact it did more futures volume than I want to say any other exchange throughout this rally. But what do you guys kind of make of that as well? And does CME have any differences in pricing right now between that chart and then maybe the Coinbase or Binance chart? Just the fact that you guys called CME fake Bitcoin made me think, man, they really CME is the one that put the hurting on shorts.
Yeah, I don't know if I have a super strong opinion on it because I've never I only use Bitcoin CME futures just to look for gaps, like weekend gap ups and stuff like that. But my bullish take on why that would be is that there is institutional money that has an interest in trading Bitcoin, but does not yet have a vehicle to appropriately own spot. So they speculate on the price, and CME is that vehicle. But I don't know. What do you think, Tommy? You brought it up. I'd like to hear your thoughts on it.
I'm not sure what I think about it yet, to be honest. I want to hold off on making any conclusions, but there is institutional interest in trading Bitcoin, clearly, outside of the crypto ecosystem. I think that's the biggest benefit to CME.
Hey guys, how's it going? Morning.
How you feeling, brother?
Caroline, I don't feel the greatest. I had to watch Sam Bankman-Fried set up on stand to get drawn as a superhero while people draw me as a gremlin. And yeah, I still feel well today. But yeah, I mean, I guess what's the discussion around this morning other than SPY being above 4150?
Well, let me just tell you this first, man. There were a few people in here, man. They were demanding that you showed up. They're like, "Where is Will? We want Will." They're very upset. I said, "Will's sick today, but we're gonna try to get him back tomorrow." I apologize profusely. They kept yelling at me. They didn't know what happened, man. They didn't know where you went. It was very
Sorry,
upsetting.
they have Jackus was here to carry the torch of the bullishness this morning, so everybody should be okay.
Dude, you actually
Actually.
missed it. Jackus is super bearish right now, man. We have inverse Jackus today.
Oh no! Oh no!
Yeah.
What's going on,
not good.
Jackus? You stub your toe?
Inverse Jackus showed up just to please the hearts of the bears. and
Jackus
give
showed
them
up as a
some-
clown on Halloween, super bearish, calling for $4 Solana, man.
Oh, oh man. Jackus is trying to make people feel good on Halloween. That's what's going on.
Tucker, I see what
I
you're
mean-
doing there.
we had to retest the emotions.
Oh my god, we're above 41.
You know what that's called, right, Jackus? In the States, we
What?
call that the last dinner, right? The last dinner before your execution in prison.
Oh.
Okay.
You make them feel good. You stuff them. You give them whatever they want right before the execution.
Yeah. But there was a good comment from one of the guys saying that if the bulls are sort of making, but I wasn't like making fun of it. I was just playing with myself. I wasn't trying to mock the bears here, but he was saying if bulls are mocking the bears, maybe it's time to fade it.
Look, when it comes to charts and price for me, it's not about sentiment, right? It's about data.
Yeah.
If you could provide data that shows me what you're talking about, I am more than willing to discuss bearishness. More than willing
Yes.
to discuss it, but you gotta show me data.
There's your data, Will. There it is.
That ain't no data, bro.
There's your data.
That's like saying bonds.
There's
is gonna
no
signal all
signal in
year.
that, man. That thing is just a nightmare to look at.
It's legit
What?
up or down.
Dude, that is just that looks like a
Max.
stable coin chart or something, man. Like it
Max,
just
Let me
Yeah.
ask you a question. Do you remember in January, Max, when every single macro hero out there was telling us how the
Yeah.
bond market never misses? And
yeah.
all year long, the bond market is
When TLT was at 125 and some of our favorite macro friends were buying calls for end of year when TLT was at 120 to 125.
They are zeroed out. if
And then
that
apparently they got out in profit even though there were no bounces. Is that what you're talking about, Will?
happens. Yeah, zero.
Yeah, yeah.
Bounces, bro.
No, I
There's
assure you,
no
I got
way.
out of these options in profit. No. I covered on the bounce, even though it was below my initial entry. Yeah.
No, they definitely didn't go to zero after being bullish all the way down and flipping.
But then these people will attack you when you are bullish now.
A lot of the macro stuff that people have been discussing all year is just grasping for straws. They go online and they're like, all right, what is the historical norm? And they just type that in, right, for macro. And they're like, well, bond market's always right. Okay, so I can point to this one. And then they pull the straw's short, you know? Then they go to the next one. They're like, all right, what's the historical norm for this? And then they pull the straw short again. Guess what, guys? There's only one long straw, right? And the long straw is the bull side. This is what it is. I hate to be the bearer of bad news, but that's just what it's been all year. I mean, if you look at the data, you look at the charts, you look at the price, doesn't matter how much SPY is pulled back. Look at how much it's up from the low. Like you're still up significantly. I don't know what else to point
That's
out.
a great
Bottom
point.
this.
Yeah.
No. But the historical norm point, that is exactly what everyone's doing with the pause. That is this exact, you literally described it to a T. That is what people are, historical norm, Fed pause, rally. Like that's
No. Max's thesis is different from what you're talking about, though. The Fed's not going to be like, hey, we're pause or we're gonna invert, we're gonna flip, right? We're gonna pause. They're not even saying that. They're gonna say we're gonna hold here and look at the data. That's what they're gonna say.
Yep.
Right, and
Yep.
that's it, and that's what they've been saying. There's nothing has changed in the overall. So yes,
I'm
you're
just
right
saying,
in one side.
we have to be consistent when we're talking about like, oh, macro looking for historical norms is a fade when that is what everyone's doing with the pause rally, right? Like,
But but you can use those theses until you're wrong multiple times, right? When you're wrong month one, when you're wrong month two, when you're wrong quarter one, when you're wrong quarter two, you have to flip your thesis at some point and say that, hey, maybe this isn't working out in my favor.
no, for sure, and that's fair. And the pause thing has not been proven wrong yet, right? Because it hasn't happened yet, so it is valid,
Yes.
right? I'm not saying it's not valid,
Yeah. You basically go with the thesis until you're wrong, and then when you're wrong, reevaluate and look for something that works. It doesn't mean keep grasping for the bearish side of things. That bearishness is not the direction. I guess that's kind of what I'm saying. Like if the market continues to trend down, I will 100%. And I've done this before, Max. Look, when I was wrong on Bitcoin going to 37, 30, 35 originally, did I not say, hey, I was wrong? We're going to come back down and we're going to trade back down in the 25K zone. And then I said we're going to hold here.
I can confirm that did happen.
And nobody's perfect with the charts, right? Like people can be off on time, they can be off on directionality, but being off on time, I'll take that. Being off on directionality, I haven't missed this year, right? Market's been off.
That's a great point.
So there's a lot there like to take in. I get the want for lower prices. Everybody wants lower prices. But if the market's not going to give it to you, why are you fighting the market, right? You as an individual, I won't even go retail and institution. You as an individual don't control jack anything in the market, just like I don't. I don't control direction. I just follow it. When you see a group of whales, and if you're running against the whales, they're going to eat you. But if you're running with the whales, you can eat with them. Why not just eat with them? Why make it some big deal because you don't want the whales to eat your friends who are dumb?
You have dumb friends, Will, that get eaten by whales?
I do have some that have been bearish all year, and they are my friends. But I know they lost a lot of money trying to do that.
That was a great talk, Will. Tyriel saying, do you think a banking crisis would bomb BTC? And I don't think
It did
so.
last
Usually,
time.
you did.
it did. It did after, right after.
Yeah, after.
But
Yes.
but there was also the dip that led to it, right? And usually that's what I've been saying for so long, and I can give so much data on that. This was the dip going into it, and then this was the rally right after. And that's what I'm saying, that you have to align these things with technicals as well, because it's always, you cannot just look at the macro and then randomly buy. I mean, you can do that, but then you need to have a really long time frame. And the same thing goes with everything. Just looking at TA also can be, I mean, in my opinion, it's slightly better view sometimes, but it's still good to find that context and make the decisions based on that. And so as Tyler is saying, Tyrell, sorry, not Tyler. I'm actually not sure how to pronounce Tyrell. I hope so. I wouldn't want to hurt anyone's feelings, but he's saying, do you think a banking crisis would pump BTC? I still think that when these crisis happens, whether it's COVID, whether it's some credit defaults or so on, it usually drops all the markets. There is always that panic reaction to that, and then the markets sell off. But then there are some more affected markets and some less affected markets. And usually what happens is that it depends where we are trading. So for example, let's say that we would be trading right around here on the BTC chart, let's say like 40K, 37, 40K. And then the crisis comes. I think we just retest this range lows, right? And then
Well,
goes
here,
higher.
here's the thing too, Jackus, and I want to bring this up because I think this is very, very, very important. I think a lot of people are fading it. What happened last time we had a banking crisis? Well, some people don't want to call it backdoor QE. That's fine, right? It's control. It's controlled money. Well, say money supply into a bank to help float them. But I could see that happening all over again if another big bank ends up in a systemic situation. So if the banks can't go under, how do you get a financial crisis? If the banks cannot go under, and now you're probably like, what do you mean they can't go under? Well, if the Fed's going to give them full price for their bonds, they're not going to go under. They're just not. Financial institutions cannot collapse at that point. The only financial institutions that will collapse will be the ones that the Fed wants to collapse. Right? That's basically it at this point. Like if you're looking at Bank of America and say, oh, they're going to collapse, you're wrong because the Fed's going to come in and support them. If you're looking at Chase and saying they're going to collapse, you're wrong. The Fed's going to come in and support them. If you're coming and looking at my local bank who gives Jack loans, $100,000 with no credit line, so on and so forth, and there's 100,000 Jacks at that bank, they might go under, right? Because the Fed might be like, hey, your risk portfolio looks like shit. We're not going to help you. We're going to let you collapse. And this is what happened with I think it was SBV and so on and so forth. These are banks that they let go under as opposed to helping them, but we saw them stimulate and help other banks who were in the same situation, right? Where their risk portfolios were less, and they're like, oh, okay, we'll give you full price for bonds that are not worth that on the open market. And that's what I think exactly what will happen, right? Like if we were not in an environment like we were today, in the way that the Fed has come in and manipulated these markets, Jack, is 100% your thesis plays to a T, and I'm on board with that. But the Fed has changed the game. They've changed the freaking game. They came in, everybody started with the same rules in the same game, and then they changed the rules midway through the game, which technically should be a red flag, right? And this is what they've done, and people just still haven't caught on. Every time something happens, the Fed changes the rules in their favor to make sure the economy cannot collapse. So we just have to be, that's why I said, like, looking for black swans right now, it's just not the play, guys. Like, it's just not, the Fed will change the rules again, and if they change the rules again in their favor, how can you get bearishness?
Yeah, you said it well, Will, that the bears are currently looking for black swans to save their thesis there. But once again, I still think that the equities are in a stagflation period for many years, and that means sideways. But once again, that sideways doesn't mean that we stay at the same price. That means a range, and there are periods of ups and there are periods of downs within that stagflation. But looking at this chart, how can anyone be bearish right here on gold? And if you are bullish on gold here, or let's say you're not bearish, how can you be bullish on DXY? How can you be bullish on equities if we have a very clean periods of correlation where commodities goes into the bull run while commodities go into the bull run while equities go sideways. So I'm still having a hard time seeing that,
Yeah, I mean, from a chart standpoint, 100% agree with that, Jack. I think and somebody had a question in the chat, and they were basically saying, "Am I implying that the Fed can't break anything?" I would say anything's possible at the end of the day, but I think if you're betting on that, it's kind of like going to a horse race, having 50 horses to choose from, and you choose the one with a broken leg, right? And you're like, that's going to be the one to win. And if it wins, I win big. And that's what you're doing right now if you're choosing to go against what's going on. The Fed can and they have been market manipulating, right? And that's important to understand, because if you don't understand that, then I have an island in Hades that I'm willing to sell you for really cheap. Just make sure you wire me the money first, and then I'll send you the island. I know
Well,
I'm
you
ranting
sound
a
like
little
the
bit,
guys
but
that are like, yes, I am a prince. Please send me all of your money and I will send you back 3 times that amount in like 2 weeks. By the way, I have a close friend here in my home state whose grandma actually fell for that. She lost all of her money sending it to like some prince in another nation.
Oh no.
Gone. It's over.
So, okay. Again, real quick, and Max, you could speak on this too, and this is something we spoke about quite extensively. Zodiac said, what happens when unemployment claims skyrocket? How are unemployment claims going to skyrocket when they can't even find workers?
I think we have an unemployment. I think we have unemployment numbers this week, don't we?
Let me check quickly.
Claims and unemployment have been in a downtrend the entire time. There's not enough people. Everybody retired in 2021. You have more consumption than you have people to be able to serve. Like I can't. I feel like I have this conversation with a lot of people on a daily basis, but when it comes to unemployment, it's just too strong, man.
What day is unemployment, Jagus?
Friday.
Yeah, so we'll know this Friday, but I also think it's a thing where until you start seeing initial claims moving up slowly for like a couple months at least, I don't think it's fair to assume that the jobs market is about to crater, or really handicap the equity markets or just risk in general. We're just not seeing the data there for it yet.
Yeah. Legit, guys. We need to see the jobs created, and that's what we've been saying, for a while, that we do expect the recession to come in and the problems to pop up, but just not yet. We need to see those jobs created start to trend below zero, which means there are less jobs created and the supply is basically drying up in the jobs market. We need to see the initial jobless claims go up, and we are seeing the opposite. And I do think that as we have seen the jobless claims trend down in the past months, basically since March, we do see the unemployment trend lower, maybe slightly trend lower. We are still at the historical extremes, lows. So I still do think that when I say trend lower, I mean like maybe 0.1, 0.2, max 0.3% lower, but
here's the thing too, Jack, to add to that real quick. I know that's your thesis, but I had the same thing with the yield inversion, and it went all the way down to the 1980 lows, man. I mean, what happens if that dips down to prior lows, like that far low, way over there to the left, where you're just like way down there. People are going to be caught off way off sides if it comes down and trends all the way down to there, right? Would I say the market would be in a dangerous territory being down there? Yes. But if that were to happen, man, so many people, this market would have already rallied so high by the time we got there that everybody missed the boat.
Yeah. Definitely. Exactly. Unemployment is legit the absolute last macro tool that spikes higher, and that's when things are really bad. That's the last stages, and you want to buy. You legit want to, and let me try to find the correlation there. But I'm pretty sure that the spikes. Okay, maybe I'm gonna use a secondary chart. I'm pretty sure that we will see that the peaks of unemployment will be the best times to buy in the equities market. Okay, so right here, maybe I'm gonna put it on one chart just so that I can use.
Essentially, you can buy all the way into the low and the bounce, and then you can buy at the peaks. Those are your two profitable areas. and that's where a lot of people are missing this whole thing. And I agree with you, Jackus, too. I think just a lot of people think we come in here and only talk bullish. We all see a recession potential, right? It's time.
Yeah.
It's time. And if you're wrong on time, you're wrong, period.
Yeah, so as you can see, just these four past examples, right? When unemployment was skyrocketing, we've already been past the bottom slightly. So you really want to start pay attention when the unemployment starts to tick up higher. Yeah, it's actually very precise that the peak in unemployment comes slightly after the bottom. I mean, there was no real and we also have to keep in mind that each time is slightly specific, right? But yeah, and also, by the way, the unemployment rates have some lags when they are published. There are some. So the unemployment is always the last thing to spike, and you shouldn't be waiting for high unemployment numbers to sell. But I think there's still lots of time. I think there are better metrics to look for, like once again the non-farm payrolls. Those are pretty clean, and we can see that each time the NFPs were around bottoming, below the zero level. That's when we've been getting those bottoms. So the
What
moment
about
we start
initial
trading,
claims? Have you looked at initial claims on that?
yeah, that's gonna be the very similar, just vice versa. And actually, if you're gonna take the jobless claims and then you're gonna put the NFPs over, and then you're just gonna invert that, you will realize it's basically the very same chart, right? It's just that the jobs created, the NFPs are slightly front running sometimes. So I think, and also many times, in like 08 or 00, we've seen the market structure break, on the equities market, on the weekly. We've seen, if I go back to,
And I like that black line you got drawn there. It's kind of like your danger zone, right? Once you get above that, that's where you start being like, oh shit, I need to start scaling out because it's gonna flip.
yeah, legit.
But I think that we could probably move that down. Not that you need to, right? But I think that if we see it over 300K, it could be a little dangerous. Imagine the smell if we did that. Imagine.
But that's why we've been talking about you need to see that tick up. You need to see tick ups before you can start calling.
Yeah. Look what did we got in 08, right? So this is a weekly, and we had very nice weekly bearish structure. Here we broken all these key lows on the weekly, and then we had another confirmation. The trend was clear broken. Let me use some of the higher time frame trends. So the trend was clearly broken, right? We sometimes see it spike slightly below, but like even here, it was inside of this. Like you cannot just look at the EMAs, you have to make it confluent with the structure as well. And there was always decent amount of time, if I'm gonna make it clean again, to get out of the market. I mean, unless you get something like COVID, of course, right? But right now, you don't get that structure break until you lose 3,800 on SPX. So I still think that you want something like this, and then this is the time you sell, and you want to have it confluent with the NFPs, jobless claims, blah blah blah. I'm just not thinking. there is some nice upside today from SPX as well. I really want to see that reaction, guys. I wish, like, you know what we should do? We should sometimes go back and look at our prior thesis that we had, and then think what happened, and analyze those just to learn.
Mm-hmm. All right, let's end on oil here because we've been going for about an hour 45 now. So let's end here on oil.
Yeah, one thing I wanted to bring up too, and this will be my last comment, is you tend to see, especially on SPY, a lot of these markets, they crumble from the top. They don't crumble from the middle. They don't crumble back down to low or anything like that until you get back to the top. So it's something you really got to pay attention to when you're looking at these two.
I'm pretty much done. I was just like jumping around, but you know my thesis for oil.
Okay. All right. Well, guys, we're going to call it here then. Guys, thanks so much for being here. As always, we greatly appreciate you guys hanging around until the end. Let's see. We got to 40 likes, guys. I didn't even have to pester you that much. You guys are truly the best. Just a reminder, guys, if you have not yet, please consider subscribing to the channel. It's really great. Again, this is Market Check brought to you by Because Bitcoin. We are live Monday through Friday at 10:50 a.m. Eastern Time daily. With this normal cast that we have today, and Tucker and Tommy had to take off a little bit early today. Well, actually, we went late, so they had to take off before the end. But yeah, guys, please like and subscribe. Furthermore, if you check out the first link in the description of the stream below, becausebitcoin.com/premium, it will take you to our website. You can sign up for 1 month free of our premium Discord. Use the code below, right on the bottom of the screen, code TwitterBB at checkout for 1 month free. Again, it will not charge you. You could have 30 days for free using the code going across the screen below, TwitterBB. A little bit about the Discord. For one, we're all in there, right? The entire Because Bitcoin team and analysts, we share all of our active positions. You guys see a lot of the analysis and discussions that we have here. But the real bread and butter, the real magic happens when we execute. You know, it's one thing just to talk about it and draw lines, but how do you actually make money and implement some of what you know could happen into an effective strategy? And that's really what we focus on in the Discord, is taking the analysis that we talk about here on a daily basis, Monday through Friday, and actually implementing it into effective strategies to consistently profit in the market. So if you want to join the Discord, you can try it for 30 days for free. We do over an hour per day. It's more like an hour and a half a day of private live calls with all of our premium members in the Discord. So we hop in the voice chat. The entire team, you know, all the BB analysts talk about what they're seeing in the markets. You got me, Jackus, Will's Outlook, Snorlax, Tucker, Wabi, everybody, man, everybody. We share our positions, and we do an hour a day of live calls with you guys. We narrate everything that we're seeing morning, afternoon, and night. And again, you can talk with us all the time. Again, live voice chats, and also just a means of communication with us really 24/7. It's a great place to hang out. It's really fun. If you want to support us, it's great for that. If you want to support your trading career, it's great for that too. We work really, really hard. Yeah. So if you want 1 month for free, the code is going across the bottom of the screen. It's TwitterBB for 1 month free. And the link to take you to the website is the first link in the description of the video. But yeah, guys, thanks so much for being here. Again, as always, we will see you guys tomorrow. Wednesday, we will be live again at 10:45 to 10:50. We'll see when we get live. You know, we're not great with the technology, but 10:45 to 10:50 a.m. Eastern time, we will be live tomorrow again here on YouTube. So guys, have a great day. Thanks a lot. Please like and subscribe, and take care.
Man, I was so out of touch today.
Okay, hang on. Wait, what just happened here?